Today, I am breaking down the strategy that takes me only 30 minutes per day to execute on, yet still it gives me a high strike rate. It's so simple to follow that even if you have never had any trading results, you will be able to become profitable with it and simplify your trading, because that is my number one goal: make trading simple. And so let's go into the charts. I'm going to talk about who the strategy is for, the time window in which you are going to be trading, why the strategy works, the entry criteria, and last but not least, not only am I going to show you how to execute, but at the end, why does this strategy have a high strike rate? So let's go onto the screen and dive right into it. So this is the 30-minute NQ strategy that has a high strike rate. Now, this strategy is only going to be executed on a very short period of time, and that is going to be between 9:45 a.m. and 10:15 a.m. New York time. Now, who is this strategy for? As you can see, this strategy only takes 30 minutes to execute, but it might take a little bit longer in order to let the trade play out. What I mean is that the execution is going to be between 9:45 a.m. and 10:15 a.m. The letting the trade play out happens for the rest of the session. Now, who is this for? This is for traders who want to simplify their trading, for traders with full-time jobs that want a fixed time to look at the charts due to time restraints. Because I know that a lot of people, they want the consistency of time. Okay, when do I look at the charts? Because there are a lot of markets where you have to be looking at the charts all the time. Maybe it's gold, maybe it's FX. You just always have to look at the charts, and that becomes very, very tough if you're trying to manage anything else. This is also for traders who want consistency of schedule, traders who want to trade at the higher probability time, traders who haven't found consistency, and traders who want to increase their strike rate. So if you fall into any one of these categories, this strategy is for you. Now, why are we using this strategy, and why only those 30 minutes? I think this is a very, very important thing to understand, because when I have a strategy, I want to understand why all of these strong points of the strategy, such as the high strike rate and the short time window, are actually reliable. So why are we using these 30 minutes? So at 9:30 a.m., the stock market opens. We only trade after the stock market open, because that's where the highest amount of liquidity comes into the market. The first 5 to 15 minutes are usually the manipulation of the day. If you've heard me talking about the power of 3, you already know that every single session is going to have manipulation in order to be a high probability session. And at 9:45, the first 15-minute candle has finally closed. So the manipulation has likely already happened. In the 15-minute, which is a mid time frame on NASDAQ, because we're going to be executing on 1 minute and 5 minute, the 15-minute candle is already going to give you a lot of information. Then this gives you a lot of information, and most traders have already lost. Why? Because they were part of the manipulation of the day. In the first 15 minutes, this is where most traders blow their accounts, and you don't want to be that trader. The entry criteria is very, very simple. I am someone that preaches direction over everything. If we don't know the direction, we do not trade. And so the entry criteria number 1 is to trade in line with the daily bias. I'm not going to go a lot over daily bias right now, but if you want to check out the daily bias, check the video in the top right corner or in the description after this video. Then we are going to wait for market open and manipulation. We wait for the sweep of liquidity and wait for a 5-minute market structure shift. Wait for your time window, so 9:45, and then we look for a 1-minute order block to execute on, and we target a 1 to 2, and we don't move stops, and we don't move take profits. Why is that? Because if you want to restrict yourself for these 30 minutes, and if you want to simplify your trading, this is the best thing that you could do, because you remove every single element besides daily bias and entry point. So we trade in line with the daily bias, we wait for the manipulation, we wait for the market to move up, move down on a bullish bias after the market open. We wait for a sweep of liquidity. Hopefully there is a low right here to be swept. We wait for a 5-minute market structure shift, meaning a 5-minute close. We wait for the time window, because let's say that the market shift happens on the 5-minute, but it happens within the first 10 minutes of market open, which means 9:40, we still have to wait for our time window. And then we look for a 1-minute order block to execute on if all of these things have been ticked, and eventually we target the 1 to 2, and we don't move stops, and we don't move take profits. Before moving on to the charts and showing you exactly how it works, I do want to show you a little bit of how it is supposed to look like. So on a bullish bias, you expect the market to, well, have the bullish bias, then this is everything pre-market. And then at the market open, you want to see the manipulation with the sweep of liquidity. Once that happens, let's say we have the 945 and we have a 5-minute market structure shift. This is where you're going to be executing. This is where you're going to be executing. We have order blocks right here, right? So that is when we have the bullish bias. You want to see the manipulation and the distribution. And then on the bearish bias, the exact same thing where we have the market ranging, moves higher, sweeps all of the highs, market structure shift bearish, execute on the order block, execute on the order block. And yes, if you want to reduce the complexity of the strategy even more, you can simply trade it on the 5-minute. But if you want the higher trade frequency, which I know that a lot of people do, then you can trade it on the 1-minute. Now, why does this strategy have a high strike rate? I'm gonna leave this for last just because I want to show you exactly how this strategy works in every single market mechanic. So let me run you through 1 week worth of trading. Okay, this is the NASDAQ chart on the week of the 25th of August. What you can notice is that the market came all the way down towards the daily order block and the weekly order block. You can see that we are at very, very big targets. Not only that, we had a very strong move to the upside, which means that right now we have a bullish bias. Now, some people might mention, okay, what about the daily fair value gap? Every time we have a daily fair value gap, this is just a catalyst for a pullback before the market moves higher. This is something that we mention a lot inside of Funded Trading Blueprint. What is a catalyst for a pullback? What is a catalyst for a reversal? So if you want to know more information on Funded Trading Blueprint, we've gotten over $40 million in funding, $900,000 in payouts. If you want to know more of this and get funded this year, you can check the link in the description. But daily bias is bullish. And for this whole week, we were calling for the longs, for the market to move down before it then moves to the upside. And the reason I'm showing the daily already is because there's no need for me to always be going back to the daily. So just know that for the full week, the daily bias was bullish. Okay, now let's jump into 9:30 a.m. So at 9:30 a.m., you can notice that the market is moving bearish, right? What is all of this? This to me is just manipulation because the daily bias is bullish. So let's go into the 5-minute and understand exactly how we could have executed on this. So we have first candle, very bearish, very bullish. So notice how we have so much manipulation happening just within these two candles. And this is why I mentioned that we have to wait for 9:45 a.m. We want to let all of the manipulation happen before we get into the charts. So now this is 9:45. This is going to be our time window between here and here. This is our time window. Now, this might seem very small, but if you go into the 1-minute, you know that we can have a lot of candles within this. We can have 30 candles that will give us a lot of price action. So let's just wait for the next thing, which is a 5-minute market structure shift. So just let the 5-minute, okay, not yet. And then we move higher. So that is the 5-minute market structure shift. So now what is the order block? We have a 1-minute order block right here. And your stop loss only has to go below this order block. Because now we have 1, 2, and 3 order blocks of protection. You target a 1 to 2R and you would set your entries right there. So let's wait. So let's imagine that that's the entry, because again, this would be your limit entry. And afterwards, the market basically offers no drawdown and goes towards the 1 to 2. So that is one of the trades. Again, you can see order block. We have everything. We have the 5-minute market structure shift. We have the trade in line with the daily bias. We have the manipulation. We have the sweep of liquidity. We have a 5-minute market structure shift. We waited for our time window. We look for the 1-minute order block to execute on, and we target the 1 to 2 without moving stop losses or without moving take profits. So that is a beautiful 1 to 2. Let's move on to the next day. And by the way, you enter in one trade because again, you have a 30-minute time window to execute on. So you ignore whatever happens afterwards. And notice how the market comes all the way back down, but because direction was right, you made money even though the market didn't go towards the big highs that you were expecting. It is not needed. These were actually trades that I took live inside of Funded Trading Blueprint. I do a market breakdown every single day, breaking down the direction that I believe the market is going in and how I would look to execute on. And if I execute on anything, I mention it and I share it with the Discord. So if you want more information on that, it's the first link in the description. Now, back to 9:30 a.m. So 9:30 a.m. market moves aggressively to the upside. And once again, as I've mentioned before, what happens during these times? A lot of traders are getting manipulated within this first 15 minutes. So afterwards, we are waiting for a 5-minute market structure shift. And notice what happens. We move all the way down. We have the sweep of liquidity. And now what are we looking for? Well, we already have the trade in line with the daily bias. We already have the manipulation, sweep of liquidity done. Wait for a 5-minute market structure shift. Okay, we have a 5-minute shift and then look for the 1-minute order block to execute on and target the 1 to 2. So we look for the 1-minute order block to execute on. In this case, it would be all the way down here or a new one that would be created. So let's see if we would be tagged in and then with a 1 to 2 target. If a new one creates, then that's where I am putting my trade. So new order block created, stops below the most recent one, 40 handles, and then with a 1 to 2 risk to reward. Let's see, we get tagged in. So let's put in a buy. Stop loss goes below. And well, it doesn't matter because I'm not executing at the right one. Then market ranges around. And notice how this execution was at 10:01. So once again, during our time window. The fact that this trade is taking a little bit longer is the reason why I mentioned that we execute within this time window and then we let the trade play out for the rest of the day. The delivery does not have to happen within those 30 minutes. That would be basically impossible. And then we reach final target after some time. So that is another 1 to 2. Now let's go on to the next day. Okay, we have 9:30 a.m. We already had the sweep. Daily bias remains bullish. So what are we looking for? We are looking for our time window and a 5-minute market structure shift. So let's wait for our time window. Okay, we have a 5-minute market structure shift, go down, and we have a order block right here. So we would set our entries, stops below the low, 34 handles. And then the target is a 1 to 2. Okay, we are in. As you can see, I don't like backtesting with TradingView. Okay, we target the 1 to 2. And the market goes to final take profit. And by the way, yes, these were trades that I did take live and I did call in the Discord. We had a very, very great week. Moving on to the next day, we have 9:30 a.m. Now, we have a strong push to the upside, which is a sweep. But remember, our trade has to be in line with the daily bias, which means we need to look for manipulation, but it has to be bearish manipulation. Sweep of liquidity, which has to be a sweep of a low. So we sweep these lows. We have the market shift. We look for the 1-minute order block, and we are currently at the 1-minute order block. So we would execute stops with 3 PD arrays of protection and a take profit at a 1 to 2. So let's go. And we have the take profit for a 1 to 2 with a beautiful other trade. And now let's go on to the last day where we have the strong move to the downside, which basically created a 4-hour market structure shift, which basically negates my daily bias and therefore I am not executing. So we had 4 trades, 4 take profits. And as you can see, these were trades that I actually took and I mentioned on my Discord. And so with that being said, this is a strategy that has a high strike rate because we are waiting for specific things. Now, why does the strategy have a high strike rate? The strategy is only traded between 9:45 and 10:15. This avoids a lot of manipulation. And if the market doesn't go in line with our bias, we simply don't trade, just as you saw on Friday. Our daily bias was bullish, the market moved extremely bearish, and therefore I didn't execute. This means that we avoid trading on days where the market doesn't provide clean setups. Let me ask you, probably most of the losing trades that you've taken were on days where you're like, I don't really know. Are we going long? Are we going short? I don't know. And so you try to flip flop between the long and the short. And so the reason why this has a high strike rate is because we focus on what matters most, which is direction. And if the market doesn't go in line with our direction, then we just go about our day. And then we are more selective, which means that we have a higher strike rate. This is the strategy that in 1 week got us an extra $1.4 million in funding added. And I want to mention that Bobby got a $9,000 payout, and someone asked him, what was the missing piece in your puzzle? And he said, the missing piece of the puzzle was bias. If you are bullish and the price is going bearish, I was not taking trades. I was waiting for price to become again bullish so I can trade again. So bias and direction is the number one thing that makes traders profitable. And that is what is getting us consistent payouts and consistent funding with an extra $1.4 million of funding added in one single week. And so with that being said, I hope you all enjoyed. Let me know your results with this strategy. And if you want daily guidance, weekly live streams, then Funded Trading Blueprint is the place to be in order to get funded this year and get multiple payouts. So with that being said, check the link in the description for Funded Trading Blueprint. And if you're looking for a prop firm to apply this on, you can check out Funding Pips, where we have an up to 50% discount code with just code Kimmel that will always get you the best discount code. So use code Kimmel at checkout and see what the best discount is. See you in the next one. Peace.